Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Wednesday, the 27th of January, 2016. Hope you're having a good trading week so far. It was a decent day again on Tuesday. It's a nice winner in microchip and some other ones. Futures weren't as exciting. I think still a little impact of the storm back east, people digging out. Plus the two-day Fed meeting started, and that probably doesn't bode well for Wednesday either. So keep that in mind. Let's take a look at the charts, and then we'll look at what's coming out and make a game plan. So here is the ES front-month futures contract. Really made no progress at all for the session, as you can see here. We'll talk about that when we look at the intraday action and also the S&P cash. Crude oil down 65 cents to 30.80. Gold down 80 cents. That's basically flat on gold. The S&P gained 26. It gapped up and never filled the gap. Most of the day was pretty dead in the back half, but it did push up earlier on. NASDAQ side, on the other hand, had gapped up, filled the gap, and then curled back up, gained 37.32. Not widely distributed, though, as you'll see. The stocks up 6, which is barely anything for the stocks. The biotech's actually down 12. And not looking good at all there on that chart. You got the VIX down 1.65 back to 2480, actually 2250 according to this. Oh yeah, 2250. The trend, a very low close finally at 0.53. That brings the 10-day moving average down to 1.15. NASDAQ volume again 1.7 and change billion shares. Two lightest days of the year of 2016 so far, yesterday and Monday and Tuesday this week. Advanced decline ratio was positive on the NASDAQ by 1,299 and by 2,098 on the New York. That's very positive after being very negative the day before. Google rallied all of 17 cents in the process. Apple closed literally at $99.99. You can't make that up. And we'll skip real quick. Here's a look at the 24-hour chart in 5-minute candles of Apple just to show you. Aftermarket, some wiggles, and down to 97.42 post earnings. You can't make this up. To look at the Seeker 13 sell signal during the trading day. That's the black background area. And then we closed. And then you see the wild candles as the news came out. They kind of missed on the iPhone sales. Heads down in the aftermarket, even though there's not a lot of volume. And then the 13 buy signal right at the low. Can't make that up. But anyway, so Apple was, up a little bit for the session. But as we know, because of the earnings now, it's down later on in the day. So it is what it is. Back to the daily charts. Amazon up $4.72. Netflix down $1.29. And we are basically just kicking off earnings season here for the market. Be interesting to see what we get. It gets later every year sometimes, it feels like, doesn't it? But there's going to be a lot of earnings this week still. And again, we've got the Fed meeting over the next 2 days. So let's take a look at the intraday action. Here's 5-minute candles. So the ES gapped up, made a real quick pullback for about 10-15 minutes, then turned up. Market direction was green the rest of the day. Basically regained and closed back where it had closed on Friday. Now, this is an inverse head and shoulders formation, by the way, potentially. If we get a flat opening and break out of this, that's a bullish formation. Meanwhile, the NASDAQ side did fill the gap, gapped up, filled it quickly, and then bounced. But if you look closely at this ES and ignore, look at the gap up, and then that push higher over the first hour, you get up to about that 1888 level. And, then after that, you're basically in about an 8-point range for the rest of the day. So that's why it seemed kind of boring in the second half. Got most of our work done in the first half of the day for this particular session. All right, so what all do we have to look forward to for tomorrow? Well, in terms of economic data, nothing early. We've got the MBA mortgage index at 7 a.m., new home sales at 10 a.m., crude oil inventories now are in. The big one's the FOMC rate decision at 2 p.m. Eastern time. Obviously, nobody's expecting another rate hike at this point, but we'll see what their language does and says. And then we'll see if we get a 3-wave phenomenon. We look for a particular set of movement to trade, if not after the Fed announcements. If that doesn't come, then we focus on Thursday, which I always said would be the better trading day of the week. And then Friday, beyond that, still have the GDP number to look forward to. So there's still plenty left this week, hoping that the better trading day is still Thursday ahead of us. And maybe volume picks up a bit here after the Fed announcement. I'd like to beat 1.75 billion shares on Wednesday. That would be good. Charts, as usual, brought to you by eSignal 12. If you've not taken a trial of our services, feel free to do so. We will help you out for a couple weeks in the lab. Good example that will be tomorrow after the Fed announcement. Have a great trading session.